Hello and welcome to Crypto Weeklies. In this video, we'll be talking about Arweave and its token AR, conduct machine learning based price forecast, as well as regression analysis, time weighted average price analysis, as well as other accumulation technique, and also present what is an estimated bull case target for Arweave. The reason that we are talking about Arweave today is we believe that's one of the lagging cryptos in this current bull rally, and none of the content is financial advice. The latest price for Arweave is at around $18.54. You can check it over here. Arweave, yeah, it's ranked number 72 by market cap. Has been having a decent max supply to circulating supply. Almost the entirety of its max supply is in circulation, so in terms of tokenomics has a decent chance to uh, not get diluted by any new token releases, because I think the price and the market cap is growing hand in hand, so any growth in market cap should get reflected back in price because of the tokenomics of Arweave. Going to the estimated bull model, that is a composite of all of the analysis that we have on the channel. That's the reason we are talking about Arweave today. Although the price has rallied by some in terms of the regression risk and the time weighted average price risk, it's one of the lowest ranked by when the risk is low, potentially the reward is high. The weighted risk is about 6%. That means the estimated bull case scenario for Arweave is at around $280 per hour estimated value model, and it represents about a 15x growth from the current price. Again, not financial advice. I'll walk you how the models exist and what is the utility of those models. And let's start with Arweave and its machine learning based price valuation. Right now, the weekly price of Arweave, this is since about 2019, May 2020, when the token was released, and this model is trained on that price action at a weekly level, and the machine learning model has provided three scenarios for Arweave. The first is the bull case at 68 percentile confidence level, where the price currently at around $18 grows to from $21 to $62 between now and end of April of 2025 in that one standard deviation bull case. In this two standard deviation bull case, which is kind of a euphoria case, where the prices in terms of from the bottom to the eventual market cycle high rally by two standard deviation instead of one standard deviation, kind of in a parabolic move between $24 to about $148. And in the three standard deviation case for RV, which is again the 99.7 percentile chance that the prices stay within this bounds, that's the extreme ceiling price for RV between $27 all the way to about $332 in that three standard deviation case. In terms of a pullback between $7 and about $15. So whatever market throws at you, again a regular bull run or a slightly elevated bull run or a bear market or the euphoria max bullish scenario, these models help understand what are the theoretical ceilings in that case, as well as some of the theoretical floor if the market were to dip. So that's the machine learning side of things. Again, they are also available at a in a tabular format, and you can interpret them using the standard deviation approach, saying that for this week there is a 68% chance that price stays within $15.78 and $21.14, 95% chance that the price stays within $13.63 and $24.27, and 99.7% chance the price stays within the range of $11.67 and $27.97. So that's again, and this is available throughout the next coming 3 to 4 months. Apologies for that. Again, this helps us estimate what could be potentially some of the 1, 2 and 3 standard deviation cases in terms of tabular format. Now that we have spent some time on that regression based analysis for Arweave, this is one of the key findings for the video. Again, the weekly candles for Arweave, and on top of these weekly candles, this is the pink line, which is the polynomial regression based fair value based on a non-linear relationship between price and time. During the bull case scenarios, the price or the regression value function goes up with time. In the bear case, goes down with time. The estimated bullish upswing for Arweave's price action and the regression trend lines, or that is the pink line, since about August of 2023. You can see that the fair value for Arweave per this model is at around $42, and the current price is around $18. That represents a undervaluation of about 60 to 70%. In terms of if you apply some of the lower end of the polynomial regression function, that this is the one standard deviation residual to the downside, you can see that the price is not only lower than the fair value but also lower than the one standard deviation function. It's close. Not too long ago the price came really close to the two standard deviation or 95 percentile band as well. Over here you can see, let's take only the two standard deviation band. You can see 95% of the time price action stays above this two standard deviation line. You can see not too long ago, that is on November 4th, when the price was close to $12, that represented undervaluation of about 95 percentile, close to the 95 percentile bottom. Now that the price is at around 42, like the fair value is to $42, some of the key levels to watch if the prices were to go parabolic in the future, and try to emulate the moves that Arweave usually, that is in the past two bull runs, short one in 2020 and one again in 2021 as well as 2024, where the price has a tendency to go above the two standard deviation threshold. That two standard deviation threshold for Arweave right now is at around $134. So those are the three key levels to watch in terms of if the rally for Arweave kind of picks up. It's a laggard right now, but again, laggards offer the best risk reward strategies at this point in time, as evidenced by this crypto risk reward analysis. Again, none of the content is financial advice. Right now, the overall market risk is at around 38%. So you can see that why, even though there are some of the laggards over here at around 37-38% risk, the risk has not, for the top 100 cryptos, has not reached what it was at around May of 2021 or again November of 2021, when the risk levels were at around between 0.8 and 1 risk, that is 100% risk. That means that even though there are some of the major cryptos which are making all-time high, not all of the top 100 cryptos are making all-time high, so that leaves room for other potential rallies as well. In terms of the accumulation strategies for Arweave, which factor into these calculations that we had, this is the SMA model over here, saying at around 22% risk for Arweave accumulation. There's a decent chance of, again, in terms of dollar cost averaging, avoiding some of the higher end. You can see this model identifies when the price is too far gone from the 20-week moving average and represents a level where you can see over here these red dots where DCAing does not make much sense. Again, if you have a even lower risk threshold, helps avoid DCAing during, let's say, whenever the price is more than 40 or 30 or 40, sorry, more than 40% risk or more than 50% risk, helps identify when to not DCA. And again, the equivalent and opposite is that identifies the time when DCAing is kind of low risk over here. Again, does not help with identifying the actual eventual bottom, but again, if you have the hypothesis that DCAing over a longer period of time, whenever the price risk is less than 30%, usually if the crypto has a run past its previous all-time high, DCAing at those risk levels is not the worst time. Again, right now the risk levels per this model is close to zero, and if, let's say, the prices were to go back to this 0.5 or 0.6 risk level over here in this green territory, at this point in time, that green territory is at around between $53 and $55. From here, it's about a 3x from $18 level to that $54 level. And the lofty goals where eventually the price, if and when in the ultra bullish scenarios between this orange and red color code, if Arweave were to have that significant move, the corresponding price at this point in time is between $63 and $74. Again, if the simple moving average goes up with time as the price rallies, these valuations can also rise by about 20 to 40% from here. Now that we have covered SMA model, the second model that we will cover is the regression risk model, which is called as the DCA model over here. And per this model, the risk is at around 4% for Arweave accumulation. This is the regression risk. It's a DCA model, kind of a replica of the regression function. Instead of at a weekly level, this is applied at a daily level. And again, this model helps identify the macro bottoms better than identifying the tops. Again, that's why we have multiple model again over here. Helps understand, let's say if your hypothesis is that you are not going to DCA whenever the price is above, let's say above 20% risk, that is DCAing only when the price is below 20% risk. This is what the model helps us understand, that okay, now the price is sufficiently suppressed and DCAing does not DCAing at that point does not make a worse decision. Again, you can cut out the threshold to again only DCAing below 10% risk, again based on your own risk tolerance. This is again, none of the content is financial advice. Right now the risk levels are at around 4% risk. That means 96% reward potentially if the rally were to go on in its full steam like it did from this February low of about February 2024 low of about $10, and eventually going to this peak regression at around $43-44 from about in about couple of weeks from February. Over here you can see over here from February 14th till about March 9th, about in 15-20 days. So that kind of rallies are also, again, as if you are in long term in crypto, you would see that if the asset is a decent asset and has a chance to rally across multiple market cycles, these rallies again usually come and go. Right now per this model, the risk levels are at around 5% risk with close to $18 as the current price. And if these kind of orange and red dots were to be plotted in the future, that lofty goal for Arweave is between $109 and $133. With this, again, we can focus our attention to the third model that we have for Arweave, is the time weighted average price model. Again, the DCA model says 4% risk. Time weighted average price says 0 risk. This is because the current price is below this blue line, which represents how much time Arweave has spent at any price point, and based on that the time weighted average price is calculated slightly at a higher than about $17.67. That represents the current price is slightly again over here you can say it's at around 5% risk. Again, these models get updated every single day, once every 24 hours. So per the model, although it's kind of 0 risk over here, the latest score is at around 5% risk. So the weighted risk, which is a composite of all of the three models, says about a 6% risk overall. And the bull case scenario, as we discussed, is at around 200 per the model, and just based on the expected value based on the risk reward is at around $284, and the reward at around 15x from here. This is just the finding of the model. I know it might sound too much bullish or not bullish enough, but that's what we do on the channel. Just establish what are the risk levels, what are the price targets based on those risk levels, and what are some of the laggards or some of the rallying cryptos. Establish some of the machine learning based price forecast and regression based analysis. So hope you enjoyed the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.